So welcome and thank you for your time in this busy and very, very volatile week. Markets are on a full upswing. We are in a confirmed uptrend. So I think things are looking good. There is some signs of profit booking that is visible on the screen right now. I think in a consolidating market, I think this is a healthy sign, unless there is a stack up of distribution days as per our methodology itself. So first of all, I think whether you can hear me very clearly, if you can put your hand up or just show me a thumb, and whether you can see the screen very, very properly, because then we'll start off ASAP. Super, super. So I'm presuming that the audio is loud and clear and the screen is visible as well. Yeah, so I'm getting a lot of comments on both these aspects. Super, cool. We can start off. Yeah, so as per our methodology, all of you are aware, we are in a confirmed uptrend. And since we are in a confirmed uptrend, the broader markets have shown far greater resilience in terms of price movements. The Nifty also has shown tremendous movement, right? So a huge move, right, from those lows and the downtrend that we saw a couple of months back, close to those 10,800 odd levels, and the huge pullback of almost 2,000, 2,200 odd points that we saw on the Nifty. Broader market still resilient across sectors at this point of time, and therefore I think we've been adding stocks very, very selectively, looking at leaders within the broader market itself, and where niche business opportunity exists, and where fundamentals are strong as per canceling and technical parameters warranted a reasonable and a sound entry point. So I think we'll start off without further ado. I think I'm not going to take much time. We'll discuss few stocks, whatever it is, but we'll probably discuss those stocks in greater detail. So my colleagues Rajshekar and Dushit will have already joined, and they will explain in greater detail, and I'm obviously here, so we can all contribute. So if you can put your queries, right, and it doesn't have to be in chunks. I think whatever we need in terms of stock discussions, we can do that. Again, a very, very clear compliance disclaimer. Whatever we will discuss is from the O'Neill methodology, what sees on the charts and on the screen, and as per the canceling and the O'Neill parameters itself. By no means, right, it is a buy or a sell recommendation that we are soliciting through this discussion that we're having. Fair enough. So let's start off. So Kei, you've got some question coming up. Go ahead, please. Yeah, Kei, you can go ahead. You can type in your question. Okay. So another request I'll do is let's finish one question from one user, because we've got paucity of time and we are going to do this quite regularly now. So don't bombard your questions right now at one point of time. Let us finish one question, then we'll go to the next. And if time persists, we'll do it at some other session. Otherwise, I think you can mail in your queries and our team will get back to you. Yeah, because it becomes very difficult. We just miss the track on that one. Okay. So Rajshekar, Rushit, you want to take Navin Flourine, Kei's question?
So Kei has a question that Navin Flourine is in the sell zone. So ideally, Navin is not in the sell zone, but it's around the profit booking zone. So if you can see in the Markets with India's chart, there is the green shaded part over here. That means the stock is up more than 20% from the ideal buy zone, right? So 20 to 25% is the profit booking zone. However, if you can see over here, here is a green flag, 23%, if you can see on the chart. So that is power to pivot. And we have a rule, I think most of you might be aware, but those who are very new to CanSlim, that power to pivot rule, whenever a stock gains more than 20% in less than 3 weeks from the breakout point, then that is termed as power to pivot, right? And whenever the stock hits power to pivot, we tend to hold it more, something like 6 to 8 more weeks from that point of time. However, if it shows some exit sell signals like 3-4 days down on a heavy volume or something like that, we might need to exit the stock. Otherwise, whenever the stock hits power to pivot, we give time to consolidate and gain it further.
So Keyur, and for the knowledge of everybody, was Ruchit was explaining, the power to pivot is a very, very powerful tool. And it's a very powerful tool to be followed because of the entire mechanism of demand supply that we've got in canceling. So when a stock hits from that ideal buy zone, right, what we call as that blue zone, 0 to 5%, and it does manage to hit that 20-25% profit zone mark within a very short period of time, So ideally, what has happened? Two conditions have happened. What are those conditions for a power to pivot? One, I think your entry point has been extremely perfect. I mean, it has been perfect from the O'Neill methodology. It has been ideal. It has made a perfect base. It is coming out of a proper base formation. Second, the fundamentals are extremely attractive at that point of time for the stock itself, which basically means that the EPS rating, the master score, and from a technical standpoint, the RSI rating is extremely strong. What a proper base formation is telling us is that the supply issues have been taken care of. So you've entered the stock in out of a proper base formation when the fundamentals have been top notch. In such a scenario, in the periodicity of 3 weeks, as Rushit was explaining, if there is strong price action that is happening on the stock, there is something which is happening right. Fundamentals obviously are absolutely correct, as I said, right? They're in the right place for the stock. The sector is probably in the right trending move as well. And the technicals are supported because I think the big buyers, I think the big boys, as we call it, who's taking care of the supply issues where demand has remained strong, is with it. So in that time periodicity, what we've seen in the past, and this is something to be seen and noticed, is that once it hits that, there is every possibility that what William O'Neill has written in his book, right, the next 5 weeks can be extremely attractive for that stock for further up moves. So even if it is coming in that ideal profit booking zone, if you see that flag come up, which is showing power to pivot, there is certain right things happening for that stock. The stock might consolidate for a few days, might come down a tad bit with lower volumes, but whatever we have back tested and what William O'Neill has seen in his historical precedences, whether in the US market and what we back tested on the same ideology in the Indian market for the same signal, becomes very, very lucrative. So I think get the ideology behind the entire perspective of power to pivot as well. Yeah, go to the next question.
The next question is on Laurus Labs. Mr. Rao has asked. So as you can see, this is a daily chart of Laurus Labs. It has given very good move recently, but if you see here, after making a top of 345, the stock has seen some profit booking. It also reached its key moving averages like short-term moving average 21 and 50 DMA. As per O'Neill methodology, we do not look into stocks which have reached their moving averages, and we'll ideally want them to retake those averages and form a base and break out from that base. So as of now, Laurus Lab, even though it's a very good company, we already made around 30% profit in previously. As of now, it's in no trade zone. At current junction, we'll avoid the stock.
So again, I think the logic what Rajshekhar was saying, and let's get the logic clear. I mean, for all the participants, I think this is something which is going to be a learning value add for all of us. We are learning, all you guys are also learning. So it has to take out those key levels in terms of key moving averages, right? Because that supply will keep on coming. So what I was explaining in terms of demand supply dynamics. So the CAN slim, right? The letter S, which denotes supply and demand dynamics for a particular stock under consideration, it becomes extremely critical because what you've seen for Laurus, right, and specifically from a growth investing philosophy, it needs to take out those moving averages. Albeit other things are also required to be seen. So earnings, the sector is in pharma, it is in APIs, it is doing exceedingly well, backward operations, all that is fine. But when you're probably looking at an entry point, right, it has to take out those moving averages. And it has already moved, as Rajshekhar was mentioning, it's almost 150% off from the pivot. So again, I think it has to make a proper base and it has to zoom off from that base. So once that base formation is complete by taking off the key moving averages, the stock consolidating, creating that kind of buffer that we probably require in terms of demand supply dynamics and other conditions remaining similar, I think there would become appropriate entry points. So I think the opportune entry points will come. You have to wait it out. So it's not something like that you need to enter a stock because everything is probably right or everything has happened right over the last few quarters. Everything had happened right for the stock and therefore it is up 150%. But now for a fresh entry, right, we don't want to get stopped out or the stock consolidating or the markets, if they are probably expected to have some distribution days and the stock probably comes under some sort of a pressure. To avoid all that, I think we're probably looking at all these entry points will become critical. So I think technically, as O'Neill says, right, I think fundamental strong, but technically base formations and technical entry points should be taken into account. So you need to look at that. Look at the chart, look at how the chart formation has happened, whether there has been a base formation for that stock. And the product does that, right? I mean, we don't have to logically think and draw lines and all that stuff. The product has done everything for us. So again, I think key moving averages has to be taken out. It has to sustain, create a base formation and go up. Yeah. So we can go to the next one.
So Dromil has one question regarding, he wants us to discuss about the Nifty at a lifetime high, that how is the market scenario as of now?
Sure.
Like this is a very unusual year and an unusual market. So we will not, we will do our best not to saddle ourselves with expectations and instead pay attention to what is happening. Now, when I mean what is happening, look at the charts. So what are they telling? So whenever the market is in a confirmed uptrend, according to O'Neill, what we look at is distribution days, right? So distribution day is whenever the index like Nifty or Sensex has fallen more than 0.2% on a volume which is higher than previous session, right? So this is distribution day. So whenever there is accumulation of the distribution day, it gives the indication of top, right? That say for example there are 3 distribution day in 6 to 7 sessions, that means the market is stopping and that is the correct time to trim your positions, like book your profits in the script which is more than 20%, which are in the ideal buy zone, right? So currently, yes, it looks a bit extended whenever it comes to in context of 250 DMA. So like it is currently more than 20% above its 200 DMA, and that scenario is rare in the market. But we should not also forget that in February, March also it went almost 25% below 200 DMA, which was also rare, right? So that is why you don't need to predict the market. Instead, follow the charts. What are the market itself telling to you? And see, if the market is at all-time high and if you see that the stocks are not able to do well, that indicates the issue, especially leading stocks. Always look for the leading stocks. Take the leading sector. Say, for example, you took some 8 to 10 leading sectors and you are checking out 2 to 3 leading stocks in those sectors. If you think there is some issue with these stocks, they are breaking down, they are breaching key moving averages, that means there is some issue. Along with that, look for the distribution day. Repeating distribution day again, the fall of more than 0.2% on Nifty with a volume higher than previous session, right? And currently, see, what you need to do is look for the leadership quality stocks that are breaking out from an early stage basis. So what I mean by early stage basis is stage 1, stage 2, right? So if the stage is extended like 4, 5, 6, try to avoid that. And see, in current market, there are reasonable amount of merchandise to buy, right? So one should not be have a fear of Nifty around 13K, what will happen, but just try to look at market and how it is behaving.
So here again, as Rushit was mentioning, have a greater perspective in terms of the overall market direction, right? So the 4 parts of our market direction: confirmed uptrend, under pressure, downtrend, and rally attempt. With the cognizance of distribution day stack up, which is increasing, is extremely critical from a market perspective. So that is one. Second, we've introduced a feature called as industry group ranks. Have a lot of you seen that? All the users who are using Cancel. Have you had a look at those? We had those features. It's very interesting if you have not, because what happens is how the industry ranks are moving, right? Across different market cycles, industry leadership will keep on changing every few quarters. And a few stocks will emerge as leaders within those industry groups and ranks that are under consideration in that particular trend or phase of the market. Therefore, how the movement of these industry groups is, how these rankings are improving or deaccelerating, it's both ways, right? For some sectors and some industries, the group ranking will improve. Maybe they come from double digits to single digits, maybe upper single digits, 2, 3, 4, higher single digits from double digits as well. At the same time, there might be some sectors, some groups, which we have internally classified, right? In our group ranking, which is very, very evident in the table displayed, that there might be some deacceleration happening on that point. So one has to be really clear that which groups are probably moving in the right direction, looking at the market tandem. And they're moving in terms of both their sectoral perspective, right? So the sectoral valuation, the sectoral RSIs, how the sectoral indices are placed at that particular market direction juncture is extremely critical as well. So I think have a look at that as well. So it will give you a larger perspective. We don't want to challenge market data, right? So that's what we do here. what the market is telling us and how the market is expected to behave, the market will only tell us. So let us take data from the market rather than having any presumptions or presumptive factors at play. The logic that we work behind every market cycle remains the same. So I think if that is going to happen, and if certain things are going to move in tandem with all these perspectives, have a look at that overall direction, have a look at that industry ranking, look at a lot of other curated lists, right? A curated list will show you a lot of sectoral stock momentum that happens. A lot of bunching up on the blue dot list of certain stocks within a sector or within few sectors, along with that group ranking classification becomes important. Stocks which come out of the weekly basis. There is a beautiful curated list on the O'Neill platform. Recent breakouts are also somewhere where you can have a clear ideation in terms of what is happening for certain stocks, and even the Minervini templates. And one more beautiful curated list is the high EPS and high earnings. I mean the high RSI rating. So that's a deadly combination. So there are a lot of things that you need to consider. I think it's all there in the product. You can probably just browse through at the end of the day, give some effort on that. And then I think you can just shortlist and then put notification alerts. All those systems are also. Yeah, sorry. So we'll go ahead. Sorry.
The next question is on Sunpharma for a long-term perspective from Rajit Prakash. Rajit Prakash, you can see the chart of Sunpharma here. It is currently forming a consolidation base pattern, that is stage 1. Also, talking about long-term perspective, we normally look for stocks investing, let's say about 1 month to 3 months, and looking at the price volume action, we may continue to hold, but normally we are just holding stocks within a small period of time. Also, at the current juncture, you can see Sunpharma is forming a base pattern and it's not able to break out, and its technical parameters are also poor. Its RSI is 55, which is a poor according to O'Neill. Also, its EPS is also poor. Fundamentally as well, the stock is not done very good. It has not reported good numbers. So at the current juncture, I think we would avoid the stock and we'll look for other stocks which are leading the sector as well as the market.
The next question is from Drumel regarding banking stocks. So he has listed some 4 banks. So we can quickly go through all the charts of the leading 4 bank. That is ICICI Bank, Kotak, Axis. So if you look at the chart of ICICI Bank, it is coming very close to its profit booking zone, right? So there was a lot of gap up openings, 2 to 3 times it went more than 5% in a day, and it is extended more than 20% from its ideal base, right? And we always like to add or have the stock in the portfolio when it is in 0 to 5% of the buy range, right? Which is the blue zone marked over here. So if you can see the green dotted line over here, so that is the pivot point, right? Then when ICICI Bank broke out from the base, so this blue shaded part over here is the ideal buy zone, which is 0 to 5% from the breakout point. So now what's the logic behind this? Why you should add whenever it's in 0 to 5% range? The main thing is whenever you go extended, right, there are chances that the stock might digest the gain, right? It can't move higher and higher, especially some of the large cap stocks. There will be a period of consolidation, right? It may move sideways, it may have some profit booking, digesting gains. So at that point of time, you are not stuck in that stock. The second reason, if you are buying an extended stock, then your stop loss will be in a problem, right? Say for example, if you bought some 7-8% above the pivot point, so if the stock pulls back, then there is a high chance it can pull back towards its pivot, right? And it can get a strong support around its pivot point. But if you have already bought it very extended, so that means that your stop loss might trigger, right? And we always believe that 7 to 8%, that's it. You don't go 10-12% stop loss, you don't keep holding. Any stock, however good the fundamentals are, the growth story is, that stock might give you another entry point, but once it is down 7 to 8% from your ad price, you have to be out of that stock, right? So when you are following a rule-based methodology, you should always have a rule on the buy side as well as the sell side. So the 0 to 5% is on the buy side and minus 7 to 8% is on the sell side. So over here, ICICI Bank is extended. So with the same knowledge, now we can quickly take through the other, that is the Kotak and Axis. Right. So almost similar pattern as far as Axis Bank is concerned. It has not formed a handle, just formed a cup, and it is extended from its zone, right? Okay, now we can go to Kotak. Yeah, over here it is very close to its buy zone. So not an investment advice, but these are the stocks which you can keep in your watch list, that whenever it comes to its ideal buy zone, and if you are convinced about the all other factors regarding the market, regarding the fundamental asset quality, then you can analyze that stock at that point of time, right? So over here, if you can see 1740 is the pivot, the green dotted line, and the blue shaded area, that is 0 to 5% from that pivot point, right? So the stock is trading very close to that area. Okay. So next we have question from Krishna on IOLCP. So after that February-March fall, it had a dream run, right? Right from around 140-50 level, it is up more than 350% from that low, right? So it had a base formation back then in February, March, right? Over here, if you can see. And then there is no particular base formation in this stock. So whenever the stock is so much extended, as expected, it consolidated over the last 2 months, and you can see it is forming a very tight region over here. Though the RS line is holding at 94, the buyer demand is also of A minus, and the fundamental strength is really good. Like if you can see over here, EPS is of 98, which is great. But there is no proper entry point in this stock. No doubt about the fundamentals, about the growth story, the pharma story that is coming on in the stock, right? But here currently the stock is trading below its 50 DMA. So red line, if you can see over here, is the 50 DMA. The green one is the 21 DMA. So whenever you click on any of the bar, you will find the what is the position of the 50, 200, 21 DMA, right? Like this, whenever you are on MarketSmith India's website. So the currently stock is almost 7% below its 50 DMA, right? So one should try to avoid such kind of stocks which are below its 50 DMA and give it some time to gain the momentum, reclaim the 50 DMA, and not only reclaiming the 50 DMA, you should look at the volume action, right? The accumulation should increase, the volume should be higher. Okay. So next is by Mr. Rao about Mastek.
I'll take this question. Yeah, this is a daily chart of Mastek. You can see here. It is trading above its all key moving averages, which is a good sign. It has very good ratings, both fundamental and technical. As you can see, EPS strong at 99, price strength strong, demand all strong. The problem is there is no proper buyer point. There is no base formation. That's the reason we have not taken position. However, using advanced technologies can take position, but it should be a smaller position. Let's say it has 50 DMA, which has done here on October 28th. You could have initiated a small position after rebound from 50 DMA. At the current moment, you can wait for the stock to retrace back to its 50 DMA and you can accumulate after rebounding from it, because the technical parameters are very good coming to the stock. Okay, the next question is on Sunflag. Sunflag, as you can see, the details as well. The stock has broken out recently last week. So it is on November 30th, and now there is some profit booking happening in the stock. The reason for which we have not added is that it is a small cap company as well. The number of funds invested in the company has also decreased 10% in the last quarter. So that is the main reason. It's always advised to go along with the big funds rather than going against them, because they have more information. They have done research as well. They also give support to the stock price whenever there is some profit booking. But in case of Sunflag, the investors are coming out of it, which is a bad sign. That's the reason it's better to stay away from the stocks which have seen uh, decreasing in funds.
We can take Uflex. And in between, Romy has one question that does Marketsmith India covers commodity? No, we don't cover commodity. Okay, so Uflex, you can see it is forming a base over here, right? So if you click on that base, you will get all the details regarding the base, which is a premium Marketsmith India feature. So this is a stage 1 consolidation base. So this is what I was discussing. You should go for a early stage basis, right? So this is stage 1 consolidation base with a length of 62 days and depth of 20%, right? Which is very ideal. Okay. And if you can see the relative strength over here also, it is of 84. And while base formation, it was moving sideways, but since last 5 days, if you can see on the chart, there is good accumulation and the relative strength line is moving higher. So these all are good technical indicators. Plus the fundamental is great with the EPS of 94, and its RO is a tad poor, but if you can see the other factors, the earning stability, the EPS growth rate, these things are really good. Currently, as it is forming the base, these are the stocks which you should have in your watch list, right? So whenever the stocks break out, you should be ready with your investment thesis. Like, should you invest or not? Does the stock have a strong fundamental? Does it has a strong growth story? So, right. So these all factors you need to look for. Like, this is a packaging company, and the things are really going good for the plastic products and the packaging companies, right? So whenever it breaks out, you can have a look around these stocks. But the ideal buy range is 0 to 5% from breakout. And you should always try not to take a quick entry before the breakout, because the breakout region is generally the supply zone. And once it clears the supply zone, it can have a good uptrend. But prior to that, you should be very careful. Now, there is one question regarding the industry group rank, that how are they updated. So yeah, industry group ranks are updated on a daily basis in the backend. So there is one column available. If you can go to idea list, then you will find the group rank screener right over there. So there is one more question, that how to see that. So you can see over here. So over here there is market/industry groups, right? And when you click over there, you will find the 197 industry groups. So in India, we have 164. So 197 is the global, but these are only in India. So we will have 164 over here, right? The advantage of using this is you can also export these things. There is industry group rank last 3 months, 6 months. So you can check how it has changed, like it has increased, it has decreased, right? What are the number of stocks? And if you click on any industry group, you will find all the list of stocks, right? So that is also an advantage. So this is how you can use the industry group rank, and it gets updated daily. Right? So if in the upper bar, if you can go in stocks, right? Evaluation details and stocks. So you will get a whole list of stocks. And here also we have the master score, EPS, price strength, buyer demand, all the ratings available. So you can just shortlist, like if you want a stock with the top master score and the highest EPS rank, so you can shortlist over here. So this is a very important feature. Okay, so now let's again move towards this stock, and Rajshekar will take you through FL.
Yes, Phil, stock has very good ratings, both fundamental and technical. As you can see here, it is forming a cup-based pattern, which is of stage 1. Ideally, it's very good to add stocks which are breaking out of stage 1. Right now, it is just 4% below its pivot. Given its strong character, both fundamental and technical, I can right away add it to a portfolio whenever it breaks out on very good volume. That is at least on 1.5x the average volume. You can add it to portfolio. If it closes above 3131, that is a pivot. And once addition, you can follow our signals while you are holding the stock. We also kept this as in our watch list, our buy watch list. The next stock is Adani Green. That recently it has given very good returns. It is up around 120% from pivot. That is after breaking out in September, it has given 120% in just 2 months. However, we did not take any position owing to its poor EPS strength. But now the stock is really extended from its pivot as well as its moving averages. That is, it is up around 165% from its 200-day moving average. Now it is a very risky bet to go long the stock at the current moment.
Now we can go to TCS. So if you can look at the chart of TCS, it is forming a stage 2 base over here. Stage 2 flat base. Why flat base? Because the depth is less than 15%. So last we saw that it was forming a consolidation base. So the difference between the flat and the consolidation base is the flat base is generally less than 15%, and the consolidation base, the depth is more than 15%, plus the time span is a larger, right? So this is forming stage 2 flat base over here. The red line is the 50 DMA, and if you can see around 2600, it is having a good support near its 50 DMA. And the stock in the Q2 result was really good, so it beat most of the analyst estimates, and they declared a buyback, right, of with the price of around 3000, and that was the reason why a good result and a buyback of 3000, that there was a gap up opening and the stock tend to do well. But over here, if you can see, since last 3 to 4 weeks, after the stock pulled back from around 2800 to 2600, it is moving sideways, oscillating around 21 DMA, right, which is the green line, and it is finding support near its 50 DMA, which is red line. So one should wait for stock to complete its flat base. Now what you should look for is look for the good accumulation. See, we know the fundamental is good in TCS, the growth story is good, like they are able to maintain the margin, the order flow book is quite good, and overall globally there are good order flows for these IT firms, right? We have also seen the same in the case of Infi or the HCL Tech, right? So over here, if you can look, it is almost 9% to pivot. So one should give time to get the stock accumulate and it breaks out from that pivot, right? So that will be ideal 0 to 5% buy range. Okay, so this one is Cipla. So if you can look over here, after a very good rally, right, Cipla is forming base on basis. So last month also, it for a couple of months back, it formed a base, and then it was not able to break out, and it fell almost 8 to 10%, right, from here. So this is why we always look for a good quality breakout, which is sustained about the breakout point on a higher volume. Because if you are taking position too early, right, then this is what it could happen. The stock easily drop more than 7-8%, and you could be out of that stock as your stop loss hits, right? Then it found support near its 50 DMA and again tried to go around 820-30 level, but it found resistance at the same level again, and then it went on to breach its 50 DMA on a higher volume, which is not a good indication, right? Plus the relative strength line, if you can see, it is dropping. It is constantly dropping and it is now down to 73. So currently it is forming the base. Over here also, the fundamentals are good. It has got some good approvals in the last few weeks also, like recently Cipla will be launching its antibody test kit, which has also got approval. So there are some positive news flow around the Cipla, the fundamentals and growth story good, but you should look for the technical strength. It should form the right side of the base, right? There should be good accumulation and it should break out this 11%. It should move this 11% and break out from the resistance zone, which is pivot. And that is where you can consider this stock.
The next stock is Kei Industries. As you can see, it's a similar base pattern of Cipla. After forming a flat base, it is now forming a consolidation base. Abhishek has already explained differences between flat and consolidation. You can see here the differences. Flat base, the depth is very small, and consolidation base, the depth is higher than 15%. Here also, the stock has reached its key moving averages after breaking out, which is not a good sign. That now recently there is some accumulation seen in the stock. It has reclaimed all its moving averages. However, its RS rating is very poor. It's 21, and ideally we want the RS rating to be above 75, 80 fine. We'll wait for the stock to improve its RS rating. That can happen. There is a strong accumulation in the stock. After breakout, we can look at it again, looking at its technical parameters. As of now, it's wait and watch game for Kei Industries.
Yeah, so 2 pointers what Rajshekar and Bushit were trying to put forth for all the previous examples is that one, now in the case of KE as well, right? You look at the overall parameters that are happening in terms of the positioning of the stock within the sector itself. So what is the earning strength? So the earning strength looks great, right? And the comparison has been done in terms of previous quarters and annualized basis as well. So the model is probably evolving in the right direction. If the vaccine comes through and the high beta correlation, which have now started moving, real estate, home improvement players, I think all these home improvement players are moving with the pessimistic or the optimistic hope that all the pessimism is probably behind us. And as activities have started happening, both in terms of real estate sales, so on and so forth, you'll probably have greater traction towards all these players coming through. It's basically into cables, high tensile cables, high voltage cables. It's also into the EPC business, supplying to industrials, getting into the retail mode, so on and so forth. So all that is fine, right? But again, as I said, right, fundamentals in place, that is extremely critical, and when you should probably enter. It has taken out its moving averages, but there has been some supply issues in the past as well. So the stock formation has been correctly formed, right, in terms of the base. So it is actually consolidating. The moment it takes the base out, I think you're having a short result that even if it's 13%, I think the perception here is that 13% है pivot तक तो बहुत ज़्यादा है. Am I missing out? It's not a question of missing out, right? It's more a question in terms of placing your risk reward appropriately. So if you do it right now, and if the markets comes under some sort of pressure, the sector and the stock comes under some supply pressure and starts breaking its moving averages, which are very close to where it is operating right now, you might get stocked out, or the moving averages might have, with heavy volumes, also a negative impact on the stock. However, I think with that 10-12% move, you have the surety that the supply is largely behind. The big boys are getting into it. And therefore, I think a lot of issues related to supply, demand, and the RSI strength that the stock will pick up, right? Because of the move that you will see with good volumes happening once it reaches that pivot, it comes out of the consolidation zone. That is more important to be observed. And therefore, I think these perspectives should also be kept in. We can go ahead.
The next stock is Sanofi India. Here also same thing. It's a fundamentally a very good company. CPS is very good at 92, but the technical parameters have deteriorated because there was selling happened on high volumes, as you can see here, above average volumes. Thus, its RS rating has declined to poor category. As well, higher demand is also at poor E, which is the least according to our ratings. Let the stock retake its moving averages, that is 50 and short-term moving average 50 and 21. Let it improve its technical parameters. Still, there is long way to go till pivot. That is 9%. By the time it detects its pivot, the technicals might improve. We might look at it once the technicals improve at, near the pivot. Subra is asking, do we have to buy at 0 to 5% from pivot? Yes, Subra, we have to. Ideal buy point is 0 to 5% from the pivot point. Manish has asked to discuss about few stocks, Infosys and Bajaj Twins. Let's first discuss Infosys. This is the daily chart of Infosys. Disclaimer: this is our portfolio stock, and we are up around 10% in the portfolio. Recently, the stock is moving sideways, and it reached its 21 DMA as well. We are bullish as long as it stays above its 50 DMA. That is still 2.4% from here. Once it reaches its 50 DMA, we might book profits and move into other stocks which are breaking out. As of now, we are holding the stock and waiting for it to rebound from 50 DMA. You see, both Bajaj Finance and Finserv have hit power to pivot. Now, taking position at this current moment is not ideal. If you have taken a breakout, I can continue to hold it. But at the current moment, taking new position at this moment is not advisable. As you all know, these two are the big NBFCs in the country. They have been outperforming the market for the last I don't know, 5 to 10 years. So these are the stocks which have given very good returns to the investors. But we have missed it at the breakout because it was not able to close above pivot. But now taking new position at the current moment is not ideal.
We can go to PI industry. A couple of questions around that. PI industry has a unique business model, right? And its agrochemical value chain has done really good, right? And not only in India, but the global agrochemical industry has a very favorable trend, right? And it is expected to grow more than 5% CAGR till 2025. So these are some of the good growth drivers for the company. Also, like, company is well positioned to capture this growth, right? Only growth is not important in the industry, but your company is a leader in agrochem sector, and it is able to capture the growth well. Like, it has already filed 22 patents and have launched 3 new products in 2020, and has more than 60 molecules in R&D pipeline. So these are good set of growth drivers. Plus, if you can see the number of fund holding, it has increased tremendously in the Q2, right? So more than 36% QOQ new addition of funds. And if you can see the share held by fund, it has increased 44% QOQ. Means not only the retail investor or some other analyst, but it is favorable to a lot of investors around the world, right? And if you can, now let's look at the technical setup. It has a strong growth driver with EPS of 94. So when we go to technical setup, recently in last month it broke out from the base, right? And it is up almost 10% from the pivot, and it is above its ideal buy zone. So if one wants to add the stock, needs to wait for the pullback over here. The good part is it is still holding the RS strength of 85, and if you can see, all the key moving averages 21, 50, 200 are trending higher, which are good indications. However, the stock has rallied a lot. If you can see, over the last 3 to 4 months, So it might move a bit sideways or digest the gains, but that is not an issue if it is able to hold its 21 DMA and it moves sideways. You can take Hindustan Unilever.
And Rushit, maybe a question after that because we are running short of time. So again, all participants will be doing this regularly every week now. And the suggestion here is that we'll do it after market hours. So we'll get greater time to discuss rather than during market because it's expiry right now. Markets are also very volatile. And therefore, I think we'll take this HUL question and one more question in the end. And then we'll do it regularly. Anything that we've missed, you can just mail it to us. We will come back to you as soon as possible. Thank you so much.
So if you can look at,
Rushit, you can continue this and we'll take one more and then we'll probably call it.
Sure. Last we will take CDSL. So in Hindustan Unilever, you can see the fundamentals are good. The number of funds are improving, but the technical setup looks very weak, right? The group rank is lagging. There is no buyer demand practically. D plus is a very poor rating. And if you can see the RS strength is dropping, right? So this had some good momentum during the lockdown and the corona, as there was good accumulation around this products of HUL. But then you can see there was a big drop, a big pullback of almost 20 points, 20% from the high, right? It is almost 20% off highs, and it is forming a base which is 18% below the pivot. So one should not try to get invested in these kind of stock when the market is moving really good, right? If you can see mid caps, some of the other large cap names in the pharma, metals, auto are doing really good, right? So at this point of time, you don't want your capital to be invested in the stock that are lagging. For example, Hindustan Unilever. If you are invested over the last 2 months in Hindustan Unilever, so say for example X rupees, then it is blocked, right? You are not getting any appreciation. But if you are investing the same amount in the stocks that are in good momentum, so there you can gain a lot. And as a retail investor, no one has unlimited capital, right? Everyone has a limited capital, and you want to make good returns, get good returns out of that limited capital. So whenever the stock is moving sideways, oscillating around its key moving averages, forming a base, try to avoid these kind of stocks. Okay, the last one, CDSL.
Okay, I'll take it. Sure. CDSL has been in our watch list from last 2 weeks. It is near its pivot. It has very good ratings, both fundamental and technical. You can see the ratings here: EPS 95, price strength 91, buyer demand of A plus, all top class ratings. Here it has found some resistance here at its pivot last 2 days back. We are waiting for the stock to close above its pivot rather than closing above its pivot rather than breaking out intraday, because it has found resistance recently. It's a very good stock. You can see the number of funds have increased 28%. It has reported good numbers last 4 quarters as well. The only problem is we are waiting for the stock to break out. Everything else looks good in CDS.
So as Mayuresh told, so that's it for today's Stock Darbar. Over to Mayuresh.
Hey, thanks, Rushit, Rajshekar. So guys, again, paucity of time, but we'll keep on doing this. I'm seeing a question from Rakesh Pant as well, UPL. Rakesh will have that question answered on your mail. So please drop in your mail ID. As soon as as the markets are over, we'll take out time and revert and resort to your query. But we'll have that every week. So trust you me, I think post market hours, we'll have larger amount of time at our hands and disposal. And there can be a larger, greater discussion around the concepts, the entire ideology and the entire methodology of O'Neill and Cancelim as a whole, which should benefit all of us going forward as well. So thank you for attending. I think it's the last half an hour for the markets as well, expiry round. Thank you for a patient hearing, and we'll get back with the dates for the coming week as well. Thank you so much, and have a safe weekend.